Hi, Disruptive Technologists. Hassan here today. I'm speaking with David Sorin. David is a managing partner at the law firm McCarter English, where he's a chair of venture capital and emerging growth market companies practice. He also serves as a member of the firm's executive committee. So thank you for taking the time to be here with us and having this conversation today. First,
My pleasure.
yeah, did I get everything right?
You sure did. Thank you.
Great. So tell us about your journey with your law firm. How did you get involved in serving entrepreneurs in the first place?
It's a great question. I'd like to tell you that it was by design from the very beginning of my career, but it wasn't. I was a CPA in Big 8 accounting before I went to law school. I was very young when I graduated from college, so although I knew I wanted to go to law school, I thought I needed some time to gain an understanding of the business world. So at 19, when I graduated from NYU, I went into Big 8 accounting, did that for a few years. Then I went to law school in New York. And when I came out, I went to the typical, very large Wall Street law firm, which was, the way that students tended to go if they had the grades and law review experience. And it was wonderful. I was at Davis Polk and Wardwell, which is an incredible Wall Street law firm. But I realized pretty early in my career that I did not want to represent the mega institutional corporate client. The good news is that Morgan Stanley, which was a large client of Davis Polk's back then and still is, had started a high-tech banking practice when I was a young associate. And I asked for the assignment of representing that group, representing the money side, underwriter side, mostly in tech IPOs, and the bug bit me. It was incredible, learning from these entrepreneurs and technologists and innovators. And so as I was growing up as a lawyer, I realized that's what I wanted to do. But at a firm like Davis Polk, you're primarily on the money side. And so after several years, I transitioned to a Mid-Atlantic region law firm, a very large one that was trying to build a technology practice. I opened the Princeton, New Jersey and New York offices for that firm. And by 2001, we had one of the largest practices in the country representing what American Lawyer Magazine called Hot Growth America. Wilson Sonsini at the time ranked number one. My law firm, which at that time was Buchanan Ingersoll, ranked number two. And we continue to grow significantly, both company side and underwriter side, and ultimately venture capital investing and private equity investing. And in 2008, I decided that the traditional law firm model was really unsustainable insofar as it related to the emerging growth company practice. So I got together a group of like-minded lawyers who wanted to change the business model and the delivery model. And we started a law firm called Sorin, which was dedicated to the representation of high-tech emerging growth companies, as well as life science companies, and the investors who support them. We were a standalone law firm for about 6 years. And in 2014, we were approached by McCarter English. It's a very large firm with offices from Boston down to DC, to start a venture capital emerging growth company practice for them. And so Sorin Rand merged into McCarter on October 1, 2014. And I'm happy to say that, today, in addition to the corporate group of lawyers that we brought into McCarter, we have an incredible IP practice, employment lawyers, tax lawyers, to help us in the representation of companies from ideation to IPO, from concept to cash. And we are now ranked in the top 10 in the country by PitchBook regionally. We're very near the top nationally and globally as well. And it's been a great experience, and delighted to talk to you about that, because the burgeoning ecosystem here in the Northeast is just been an incredible thing to watch.
Yeah. One of the things I don't know if I read it on your website or if I see you mentioned like on YouTube or somewhere, but it's about the idea that the incompatibility of these older firms, and I think you just talked about it. What did you do differently? Like, how are you able to kind of mitigate that gap?
There were two things that we thought needed to be changed. And one is that the traditional law firm model operates on the pyramid, right? Lots of more junior, inexperienced lawyers, and then fewer and fewer experienced lawyers. But emerging growth companies and startups and expansion stage companies don't have the appetite, the time, or the resources to have their counsel kind of learning on their nickel. So we wanted to create a flatter structure, more rectangular structure, so that we could assure our clients that they would have experienced lawyers, both associates and partners. So we started from the premise that we weren't going to allow anyone on our team at the pure training ground level, because our clients don't have the time or the inclination for that. And so everybody on our team has experience. They've either been corporate lawyers or IP lawyers, whatever the particular substantive area is, before they can join our team, so that they come with a skill set ready to serve. The other thing we did is we took a dramatically close look at overhead costs. And this is where I put my accounting hat back on. So, we redesigned what the law office looks like. We use productivity tools that were not used to the same level that they should be. We changed how we file, how we use phone systems, computer systems, et cetera, so that we could dramatically bring down the cost of lawyering, with the exception of compensation. Compensation was sacrosanct because we wanted to make sure that we could recruit the finest lawyers in the country. Our team is comprised of lawyers from really all of the best firms and peers and competitors with which we work. And the overall result is better service for our clients at a lower cost. And we're not giving anything away, because the way we manage the business is we have higher profit margins. And so the result is that we can earn more at a lower cost to our clients, the proverbial win-win situation. And we designed this with our own clients in mind. We learned from the entrepreneurs and the business people that we have long represented in how to run a business, utilizing the tools that are available to us today that were not available historically. And we operate much like our lean startup clients do. And they get better service, more responsive, more pragmatic, at a lower cost.
It also seems like you're taking a bit from the venture capital model of, like, you have startups, so they're high potential businesses, but also high failure rate. So it seems like you're kind of hedging that or factoring that into your financial side.
Hassan, I think you're absolutely right about that. We are not investors in the traditional sense, in that we are not writing a check, but we are investing in our clients through the use of our time and skills, knowing that not all startups succeed, not all businesses are financeable ones. And so, we rely on our expertise in attracting the right clients and in turn choosing the right clients to represent, because it wouldn't be economically viable if we made too many mistakes, right? So it really is important that there's this sort of mutual weeding out process. The right people come to us, and we attract the right people and choose to represent the right kinds of clients, so that the reality is that what should be a very high risk, high reward practice, we're able to mitigate that risk through the client selection process.
Yeah, that makes a lot of sense. What have you seen, in the past 20 years in the scene in the Northeast when it comes to startups? I just know the ecosystem is growing so dramatically. And what have you seen, and that's happened that you're excited about, and what do you see that's still missing?
It's a great question, and the change has been a sea change. 20 years ago, you didn't really think of New York as being a hotbed of venture capital activity and innovation. It was first and foremost a financial center. Ultimately, some of the early marketing and advertising companies really helped to fuel what was referred to as Silicon Alley back then. And 20 years ago, some of us were chasing Silicon Alley before it really existed. 20 years ago, most of the tech work in the region was going on. It was more hard tech, and it was going on in New Jersey with pharmaceutical companies and telecommunications and, the move toward mobility, et cetera. And what's happened over the last 20 years has been that this region has become the second leading destination for venture capital investment in the country, second only to Silicon Valley. We've surpassed Boston now for I guess it's a good couple of years running. And the interesting thing about the community, the ecosystem here, is that it runs the gamut of technology sectors. So unlike an area like Boston, which is almost primarily life sciences, what we see in our region is a vast array: fintech, AI, AR, VR, natural language processing, some of the new, I hesitate to use the word cryptocurrency, but blockchain and digital securities. So it is a very vibrant, diverse community in terms of technology sectors. And interestingly, it's also a very diverse community in terms of entrepreneurs and investors today. But an entire ecosystem has grown up around micro venture in this region. We have a robust angel community now. But yes, we are still missing a number of aspects. And this is a very different ecosystem than you might see out west. I think it's more disciplined. There isn't as great a reliance on invest in everything and see what sticks. So there's more financial discipline being brought to play. I think more diligence because of the development of micro VCs. Not everything has to be a unicorn, which is probably one of the biggest changes I've seen in the course of my career, which has allowed for a far greater level of innovation. The reality is most companies exit, sub 300 million, let alone $1 billion. And therefore most companies are not unicorns, but it doesn't mean that they're not excellent, viable investment candidates. And that's something we see a lot in the East, and it's been, I think, a very important part of growth. What we don't see as much is the level of university involvement, the way Stanford has really helped build Silicon Valley, the way Harvard and MIT helped to create the Route 128 corridor up in Boston. There is less of that here, but it's changing rapidly. We do a lot of work with companies emanating out of Princeton University, out of NYU, out of Columbia, Rutgers, NJIT, and of course with the Cornell Technion Institute now in New York. We are seeing the emergence of what has traditionally been a critical part of technology innovation and commercialization, and that is the university. And that had not happened in this region historically, but it is happening now. And we're really happy to see the way the universities and colleges have really stepped up, driven in part by professor demand, faculty demand, and student demand, because the career paths that were obvious and available to me and others like me when we graduated don't exist anymore. And entrepreneurship and a willingness to basically own your own career and your own career path is far more important today for students to enjoy successful outcomes. than it was when I was a young person graduating from school.
Yeah. Yeah, that's definitely, there's definitely been a shift to entrepreneurship in general, I think, with younger folks. Um, so taking a turn to another direction, looking at where we are today with with COVID, um, what do you see changing in the landscape, like immediately, like what's happening today, and then what are some of your thoughts of how this kind of falls out in the future?
It is a great question. You know, most of the time when we are looking at uh, levels of investment activity and who gets financed and who doesn't, we're looking really at kind of microeconomic factors and things that are very specific to the entrepreneur, to the company, to industry demand and marketplace demand. What we have here is, you know, one of those external shocks to the economy that does create a whole lot of uncertainty. So there are some immediate ramifications, there's some intermediate ramifications, and I think there's some long-term ramifications. The immediate ramifications are obvious, right? There's a terrible amount of uncertainty. Uncertainty is something that investors generally don't like, and we're seeing a lot of money sitting on the sidelines, waiting to see how things shake out. Anecdotally, you know, in our own experience, we did 250 finance transactions for clients last year. January was robust. February was robust. And then March hit, and when it became clear that there was something very real about COVID-19, deals that were in process in early March, most of them tended to get done in April and in early May. If deals were at a very early stage, many of them did not proceed. Most of our M&A transactions were put on hold, our clients' transactions. So the immediate effect has been, I don't want to say frozen capital markets, but certainly a dearth of transactions. Transactional work fell. The folks hardest hit, again, this is anecdotal relative to our client base, were primarily later stage companies. The companies for which the opportunity costs were a lot higher, where valuations were higher, where expectations were higher. So the companies that were, you know, at the C or D financing stage, or were, you know, looking for a relatively near-term exit, that's been a real problem. Earlier stage companies where valuations are lower, where the opportunity costs are less, have not been hit quite as hard. So I think from an intermediate perspective, those companies will begin to emerge from this earlier than some of the later stage companies. And later stage companies are likely to be the hardest hit in terms of, you know, when they can hopefully achieve their goals. On a longer term, also on a short-term basis, you know, certainly there are industries that, you know, will not be all that interesting to the investor community. Anything related to events, hospitality, restaurants, travel, you know, are likely to be the hardest hit. I think that most people are anticipating some relatively long-term change in consumer behaviors that obviously will influence what are attractive investment opportunities. Longer term, I think that we're likely to see some real changes in how real estate is used, commercial real estate, remote working, connectivity, the ability to communicate the way you and I are communicating right now, I think will be highlighted. There will be far more acceptance of Zoom-like connectivity rather than meeting in person and traveling to meet. I think that there will be far more acceptance of remote working. So I believe that companies will need far less commercial real estate going forward. And I think that there might be a long-term change in consumer behavior, not just in terms of travel, but in terms of what we tend to think of as necessary. After 2.5 or 3 months of um, relative isolation and not consuming in the way that we've consumed historically, I think there could be a shift. Whether that's a permanent or truly long-term shift, I think remains to be seen. But I believe that'll play out in the kind of innovation we see, and in what has ongoing, widespread market acceptance or not. That's going to be a really interesting thing to look at going forward, after being such an incredibly consumer-oriented society for so long.
Yeah. 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 Just trying to imagine some of those, differences of just like, there's no rush to really get back to going to a movie theater right now, or like, there's so many things that were just normal.
Absolutely right. When you think about concerts, other large-scale events, how long does it take for a sufficient amount of the population to be willing to do that again? What happens to the economic viability of those types of programs? What happens to the economic viability of a restaurant when it needs to, have tables further apart? And what happens to the economic viability of the movie industry? And, do networks like Netflix or Amazon Prime or Hulu increase in importance? We're seeing movies that would have historically come out in theaters first, coming out on TV through these streaming services as a new outlet for them, even early on. We'll see, the extent to which that's a permanent shift.
Yeah. So switching gears again to diversity within the startup environment. What are some of the issues that startups deal with, or that you've seen when it comes to creating diverse, or both like from the founder's perspective of like having a diverse group of founders, but also then to them like building their companies with diversity in mind?
There are a number of factors. One is a more long-term problem, and that is that many people of diverse backgrounds have never seen entrepreneurial activity and innovation as their pathway. And so bringing that knowledge to them is a critical part of encouraging diversity over the long term. And, you see educational programs now being brought to areas that contain underrepresented populations. There's also a little bit of the old boys network, right? That venture capitalists tended to be primarily white men, and they invested primarily in white men, in companies being developed by white men. We're seeing the entrepreneurial world beginning to look a lot more like the world at large. And that's terribly important, not only because it is good and right, but because it's economically sound as well. And so certainly pursuing diversity in the interest of pursuing diversity is of critical importance because it is the right thing to do. But as more important, folks recognize that it's also the smart thing to do and the economically superior approach, that we're seeing more and more interest in diversity. It's driven in part by the demands of some of the larger institutions, so law firms, accounting firms, other service providers are being required by their own client base to pursue diversity. Businesses are required by their marketplaces to pursue diversity. Universities and accelerators and other programs like that are enabling greater diversity because they are educating people and providing pathways. And we're seeing an increasing number of investors um, showing an interest in investing in diverse entrepreneurs. Harlem Capital Partners, it's a venture fund here in New York that is specifically designed to invest in diverse entrepreneurs. And all of this brings attention to this very real need. Some of it is difficult because many people of diverse backgrounds have not pursued this pathway because it wasn't available to them. So this is a long-term project in terms of bringing a level of parity into the marketplace. But it is happening, and it's really exciting to watch. And ultimately, it's going to inure to the benefit of everyone. So we're really excited about that. And as you well know, we just put on a program through Disruptive Technologists talking about the diversity in education and in the marketplace and how you pursue these things. And, I think the greatest lesson I have learned as I've become very involved in this is that it's not enough to attract people of diverse backgrounds and then just see if they succeed. We then have to create an environment that will enable and empower success. And so recruiting and hiring people of diverse backgrounds is merely the first step. And we have to make sure that we create an environment for success. And that means, not just having, one or two people of diverse backgrounds, but actually building a culture where, people can look at their own workforce and see people who are like them. And ultimately it adds so much to the ideas that are being brought to bear, the cultural influences, the ethnic and racial and gender and sexual orientation aspects of, what different people bring to the table. And ultimately it's wonderful to watch, but it is a challenge.
Yeah. Yeah, no, actually, just hearing what you're saying is a lot of, a lot of what I've been hearing recently too. With there's just the context of you have, you have a world, you have a country where, there's people from all walks of life, all different backgrounds, all, just that diversity and having that reflected in the workplace. It's not only the right thing to do, it's also a profitable thing to do because you are you're reaching markets that you may not be getting to otherwise without that diversity.
And in addition to that, it's not even just reaching the markets, it's the influences on ideas and where innovation is necessary. And I really appreciate that because I see greater things coming out of that. And, any society that is willing to ignore the brain power and the creativity and the ideas of large segments of its population are going to suffer. And it's so important that we not throw people away or ignore so much of the value that exists within our society. And unfortunately, if I can bring it back to COVID-19, what we're seeing right now is disproportionate impact on certain people who are bearing the biggest burden associated with what's going on right now. And, there are lessons in that as well. And that has to change. The level of inequality or the polarization, the disparities, they're not good for society. And the interesting thing is that they're not good for wealthier or more affluent people either, because ultimately, if we don't have a society in which we have sufficient numbers of people who can produce and consume what that society is capable of developing, we all lose. And it's really important, I think, to be thinking about all of this on a long-term basis rather than the very short-term basis on which we tend to think and act. Climate change is an example of that. One of my biggest fears about what happens in the post-COVID environment is, given the amount of resources that we have to bring to bear, rightfully, in order to avoid some of the truly negative economic consequences, trillions of dollars, right, being put into the economy right now. But the cost is going to be tremendously increased deficit spending. And as those deficits grow, we will have yet another excuse, and I don't mean that in a pejorative way, but another excuse not to bring resources to bear for climate change, to change the education system, to make sure we're educating our future workforce for the jobs of tomorrow. And so much of the kicking the can down the road that we've done for the last generation or two, I was hoping that was coming to an end. And then you get the external shock of COVID, and the deficits are going to increase dramatically. And so we're going to have more reason to say, well, we can't do those other things that need to be done. And I don't know the answer to that question. But it's something I think we have to think about very, very carefully as we consider, what happens for the next generation.
Yeah. And I think, just hearing that, really shows how important the work that you're doing right now is. Just, entrepreneurship is some of the best opportunities of empowerment for a lot of folks that, maybe you don't see yourself in a corporate job because it never made sense to you growing up. Like, nobody in your life went that way. But entrepreneurship, can connect with you, since it's about you as an individual. It's about you finding that thing that's you, that you bring into the world.
I'm smiling broadly as you say that, because I couldn't agree with you more. And I think there's another aspect to all of this that we haven't talked about yet. And that is, hearkening back to what I said earlier about the traditional career paths. As we move into a less and less labor-intensive economy, artificial intelligence or robotics, or other means to allow for production of whatever it may be, to be less reliant on human labor, human capital. We have to find ways to make sure that people are engaged. And so we have to change the way we educate, because we have to prepare people for the jobs of tomorrow. I think that we can also kind of look into the future and see that the formal labor force, the employment sector and economy, is likely to change. And so an entrepreneurial spirit or inclination, I think, needs to be inculcated in everyone, because even if you're not going to start your own business, kind of the typical definition of entrepreneurship, we're all going to have to be the entrepreneurs of our own careers, because I can see a future in which even employed people work for multiple employers rather than a single employer, as employers decide, I only need a piece of you, right, for what I need you to do for my company. And so this ability to kind of be the entrepreneur or the manager of your own life, I think is becoming increasingly critical, and certainly for the generation, that's just joining the workforce, so that will be joining the workforce in the near future.
Yeah, I think I can see that there's definitely streams of that future that are sort of happening already, there's something exciting about that, and something about, it really tells you that there's a preparation that needs to happen. And I think the entrepreneurial spirit really does speak to that.
Yeah, I don't think there's any question. I think it's both exhilarating and terrifying at the same time. And where there are challenges like this, there are opportunities, and it's important for us to determine where those opportunities reside and how we can maximize them.
Yeah. So, I think we only touched on a fraction of the work you do to serve the entrepreneurial community. Like while we've talked a lot about your law firm, and there's so many other things you do with accelerator programs, with running a venture fund or being part of a venture fund. You also teach at Cornell Law, and you've taught at other schools. So, what keeps you going, and what habits or practices have you found most useful to honor those commitments, to stay on top of all that?
I am such a lucky person. I don't know how else to put that, right? I was first generation college graduate in our family. Tremendous opportunities were afforded me. And I think about that a lot, and it informs how I try to live my life and how I try to operate, my own professional life. And I know it sounds corny, but too much has been given, much is expected, whatever that saying is. And I was able to go to college at NYU because someone who would never know me was generous enough to provide scholarship dollars. And so I believe a big chunk of my life is about paying it forward. And when I became able to do that, we created a scholarship program so that first generation college kids would have a shot at the same kind of shot that I had. Because I do believe, and I continue to believe, that education is the most powerful mechanism for individual growth, whether that's intellectually, personally, professionally, financially. And so my career, which has been built around the tech sector and entrepreneurship and innovation and investment, goes well beyond my client service. And I love client service, but I also think it's incumbent upon me, and it's part of my duty and my firm's duty to give back to the community. So we did help create an angel network. We co-founded the New Jersey Technology Council. I chair Disruptive Technologists because it's an opportunity to give back to a community that frankly has done so much for me and my family. And we're blessed. We're truly so fortunate to be able to be part of that. And I get such satisfaction every single day as I watch entrepreneurs, young and old, develop what are truly world-changing technologies and products and services. They create jobs, they create wealth, they improve productivity, they change our quality of life and standard of living. And the opportunities that excite me the most are the ones where our clients are in some kind of first mover situation, whether that's in a life science space or a technology space, and helping to build and nurture and sustain that ecosystem is a critical part of that. So it's become a really important part of our life's work.
Yeah. All right. I think I can go on and on asking you questions, and really, just it's just been so fascinating speaking with you and just hearing.
A pleasure. I appreciate it.
Yeah. But I want to thank you so much for your time. And yeah, thank you so much.
Thank you, Hassan. And I have to give a shout out to Lauren Keeson of Disruptive Technologists, because, every quarter she is putting on programming that serves this community, hundreds of people at a time. And it's such important work. And I have so much respect for her.